Saturday, August 22nd, 2020, Maneco 64, home of alternative economics and contrarian views. So I want to talk about how to build a gold mining portfolio today. This is not investment advice. I'm not an investment advisor. I'm just telling you how I go about it, how I've done it in the past successfully, and it gives you an idea what to do if you don't want to buy the packaged ETFs. I would also say that this would be a mixed mining portfolio. And why mixed? Well, I've put together a list of 11 junior miners here that I've gotten from looking at prospectus and details of funds like the Sprott gold equity funds, Sprott ETF funds, also from listening to people on the internet talking about mining investments. So I've just put together a list of junior miners, 11 of them. And I've put a list also of just 3 of the major mining companies. And I think it's up to you to decide, of course, how many of these you want to put in your portfolio. I have an idea of what I want to do. And I think a good way to look at these companies and what potential they have is through the market capitalization. And just to be clear, I haven't done research on each individual company, deep research. I haven't gone and called management or done anything like that. I've let the professionals do that. People like at the Sprott Asset Management funds and elsewhere, people I've listened to online who are professionals. Yes, I was a market professional in futures and options in the bond market. So just want to say that the mining sector, I have followed it for years, but I'm not a specialist. So I think this would be a good way for a lot of people to look at building a portfolio. And I've called it the mixed mining portfolio because I've put together, for me at least, I've put 5 of the junior miners that I've taken from this list of 11 and added 1 of the major miners. You could do it another way. You could have all of them, or you could go to the Sprott website and get even more, companies and divide it up and get some more major miners as well, aside from Newmont, Barrick, and Franco-Nevada. But looking at the market cap, it gives you an idea of how big these companies are, so that you just don't pick them because you like the name, but you pick them because of their size. You pick a very small one, for example. That's what I've done. You pick a mid-sized one and the biggest one of the junior miners, and then you can pick whichever one you want, really, from the major miners. You can see that they also pay a dividend. Newmont is paying over 1% dividend, 1.53%, which is more than US Treasuries. I think even more than the 30-year bond. You've got Barrick Gold, which Warren Buffett invested in the second quarter. That's got a dividend yield of 0.55%. And Franco-Nevada, which is a major mining company, but it's about half the size of the Newmont and Barrick. That has a dividend yield of 0.7%. The other thing I would say, if you have never invested in the stock market, never, for example, had a brokerage account, I would say that you need to first get that sorted out, that you learn how it's done. But for those of you who have experience in investing in the stock market, that shouldn't be very difficult to do, what I've done here. The other thing I would say, I've put the market caps all in US dollars, but a lot of these companies are quoted in Canadian dollars, some in British pounds, some in Aussie dollars. And some of them are listed in different countries as well. So you need to make sure your broker has access to these companies as well. Some brokers might not have access to them. My broker, for example, doesn't have access to the very small mining companies, the over-the-counter companies. So I'm not looking at those. You might find those in Sprott's junior mining ETF list, but I'm not gonna put them in my list because I don't have access to them. You gotta make sure that you have access to them. The other thing I would say, you might wanna look at the geographical risk from these. There's a company here, for example, Anika Tambang, that's in Indonesia. You might want to stay away from investments in countries that are maybe not politically stable, even though I would say everywhere around the world is pretty unstable now. There's like West Africa Resources, of course, the name says it all, West Africa. And yeah, it's up to you, I think, to make your decision. I'm just trying to show you here how I've done it and how it might be of help to you to decide to build a mixed mining portfolio, or you might want to just keep it to the small or junior mining companies and exclude the big miners. The reason why I've put them in there is that I think they give the portfolio a little bit less risk than just being in the juniors. So you put a few bigger companies in there, and they've also got a dividend yield, which isn't that important, I don't think, because I think the mining companies are going to be doing very well in the future. I just listened to an interview that King World News did with David Tice. He was saying that mining investments are only about 1/3 of 1% of all stock market investments, US investors or global investors, and that a few years ago it used to be more like 2.5% of all stock market investment. So there's a lot of potential here for people, for institutional investors, for all kinds of investors to jump into the gold mining bandwagon, so to speak. We saw that Warren Buffett has done that, and I think a lot of people are going to probably follow Warren Buffett. Before I finish, just to let you know what I did here as well, I added up all the market caps of the junior miners, and I divided it by 11. I got the mean market cap, which is $1.46 billion. And then you get the high and the low, 3.07, which is Hecla, and 0.24 billion, which was Gold Standard Ventures. So that's how I looked at it. This helps so you don't pick all the biggest companies. You pick a big one, the biggest one, the 1.46 billion market cap one, and then you pick the smallest ones as well, and you mix and match. That's up to you to decide. So there you go. I hope that helps. If you have any more questions, yeah, just comment below in the comment section. I'll try to answer most of the questions. What about the proportion of your savings that you have? You might have been stacking gold and silver for the last few years or longer. Am I saying people should get out of that and put it all in the mining sector? No. I think it's up to each individual to decide their risk profile. Some people might want to keep 90% in real money because that's what gold and silver are. And so savings, and then risk 10% of that into the mining companies. Or if you're less risk averse, 50-50. So it's up to you. I'm going to do what I feel comfortable with. I'm not going to tell you what my proportion is because you need to decide that for yourself. You're the only person really who knows what your risk profile is, how much risk you're willing to take. You're the only one who knows what gives you peace of mind and makes you sleep soundly at night, right? So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.